Hello and welcome to Too Sharp with ET. I'm Nisha Poddar and let's get you the two important picks that you must know about today. So the key factors influencing the stock market recovery and also RBI's rate decision, what to expect. So, stock market recovery amid the global challenges stands out today. There has been a sharp and surprising bounce back in the stock markets as global investors navigate the ongoing tariff issues and also seek buying opportunities. Now, the Sensex surged over 1,000 points following, remember, yesterday's massive sell-off that was seen in the market, while the Nifty surpassed the 22,500 mark. So, what's really driving this rally? Well, first, it's the global recovery in equities, with Japan's Nikkei rising by 5%. A drop in crude oil prices is good news. It's below $65, which alleviates the inflationary concerns. Anticipation of an RBI's rate cut with a 25 basis points reduction is expected and is giving some relief. Also, decreasing US bond yields, making the investments in India much more attractive. Also, remember that bargain hunting after a steep sell-off on Monday was something that could have been expected. However, not everyone is as optimistic. Larry Fink, the CEO of BlackRock, warns against being misled by the bounce, noting that this could be a fleeting dead cat rally if recession risks really continue to escalate. Although markets are up today, volatility is likely to persist. Let's now focus on RBI's rate dilemma and also the rupee's performance today, which was important. All eyes are on the Reserve Bank of India's monetary policy meet as a 25 basis points rate cut seems almost certain for tomorrow. That also gave relief to the markets. Bringing the repo rate down, remember, to 6% is what is being expected. The motivation behind this move is also to cushion the economy from the global challenges, especially the impact of new tariffs imposed by Trump on the Indian exports, which could, remember, potentially reduce the GDP growth of India by 20 to 40 basis points. Now, the Indian rupee is also facing downward pressure, opening at 85.74 against the dollar amid a market slump across Asia, due to the fears that these tariffs could really trigger a global economic slowdown. Now, the rupee opened, remember, 50 paise lower compared to the previous session's close of 85 rupees 23 paise against the dollar. Important factor impacting the rupee is the Chinese yuan, which fell to its lowest level since 2023, closing at 7.23 against the dollar, influenced by the central bank's decision to ease its control over the currency in response to the intensifying global trade conflict. Now, the reports indicate that the RBI might permit further depreciation of the rupee if China continues to devalue its currency in order to maintain the export competitiveness. India's trade deficit with China reached $94 billion last year, and banks are advocating for changes in the RBI's toolkit as well, suggesting the elimination of the 14-day repo and the reinstatement of overnight liquidity operations to really improve the transmission. Now, additionally, there are discussions surrounding a new benchmark rate, that is the Secured Overnight Rupee Rate, or SORR. So overall, the focus isn't just on the interest rate decision, it's a full policy playbook that the markets are really watching out for. With that, it's a wrap on Too Sharp with ET. Thanks so much.